Inflation rose more in June than any other month in 10 years, and it has investors worried. If you don't protect your portfolio, you could get squeezed pretty bad. In this video, I will show you how you can protect yourself and your portfolio so you keep investing and making compound interest work for you, while at the same time you don't have to worry about rising prices. Hi there, welcome to your channel, The Foreigner in America, where I teach locals and foreigners everything related to money, personal finances, investing, real estate, and the markets. If you're someone like myself that loves money and wants to be independent and wealthier, please subscribe to this great channel and hit that bell so you're alerted every time I upload videos. I also post on Instagram at The Foreigner in America. I post on my blog, theforeignerinamerika.com, where I elaborate more on the inside. And I have a book, A Foreigner in America Can Succeed, which you can get for the cost of a latte in the link below. Inflation rose more in June than in any other month in the last 10 years, and it has investors worried. Why? Because if prices go up on everything, your portfolio gains suffer. Historically, this has been the behavior of inflation, as you can see in this chart over here. You can see that we had moments of horrible inflation between 1974 and 1981. But in the last 10 years, it has been pretty low at 2 to 3%. This scenario is particularly rough on retirees, which have to live just from the returns on their investments. Younger people don't care that much since they're still receiving a paycheck. What we don't know is if this trend is only temporary due to the pandemic and the different stimulus given to Americans to help them out, or if this is the new norm for the next 10 years. Whatever this is, either a temporary measure or the new norm, you need to protect your portfolio against inflation. And how do you do that? Well, I will tell you right now, but please give me a like to project my channel and make it a little bit better. I appreciate that. What portfolio managers are advising their customers is to increase their allocation to value stocks or companies trading at rates below average in the S&P 500. This is because these kinds of stocks, value stocks, do better at inflationary periods. These companies are on industries such as financial and consumer staple sectors that get hit less by inflation. These industries tend to perform better because they have more pricing power and are able to get price increases than other industries. These businesses are also, on the most part, well established, meaning that you don't have to worry about their growth in value. Another thing you can invest your money on when there is an inflationary period like this one is on tips. Not the tips you give to your favorite bartender, but in Treasury inflation protected securities. These securities don't offer such big of a return, just like fixed income investments, but they will add an adjusted principal amount if inflation increases. And of course, the other hedges against inflation that I've mentioned in this channel are real estate, gold, and cryptocurrencies. Real estate is key in periods of higher inflation because the property values go up a lot more, and landlords can increase rents at the same pace as inflation. Gold has been a good hedge against inflation since it is not directly correlated to the dollar and its value tends to go up in high inflationary periods. But the new key player today is cryptos. Cryptocurrencies are highly volatile investments on digital coins based on the blockchain platform that are not directly correlated to the currency and not centralized. Make sure you don't put all your money there, just a good amount you're comfortable with, and let it sit. Which investments should you avoid? Let me tell you right now. Avoid long-term bonds and CDs. Why? Because tying money right now at low rates will make you miss good opportunities to invest in the future. What financial advisors are telling their customers to do is to invest in short to intermediate bonds and avoid anything long term. Also, they're telling them to avoid growth stocks with companies that get higher than expected returns. They do worse in periods of higher inflation because they expect to earn a big amount of their cash flow in the future. If inflation goes up, the future cash flows are worth less. Whatever you plan to do with your portfolio, make sure to talk to your financial advisor and create a well-structured one that fits your needs according to your age, situation, net worth, and risk level. Never follow the advice of one particular person on what they do in the market. Maybe that works for this person, but not for you. Now let me give you my foreigner insight for this video. If you haven't watched my previous video about investing on an index fund versus investing on a good rental property, make sure you do it because it shows you how you can make money in both scenarios. If you're comfortable investing in the markets, go for it. If you want to put money into properties working for you, like myself, go for it as well. What you shouldn't do is keep your money in a checking account, please. If you do that, you will get murdered. Every month your money is there. It's like if you were spending it. Think about that. Just by leaving your money there, it's just like if you were withdrawing money and spending it on booze or cigarettes every month. Another thing you shouldn't do is get more debt. Don't buy a more expensive car. Do not get a loan on the equity of your house. And do not get expensive things like TVs in monthly payments. Chill out, man. Right now, your money is losing value faster, so keep it with you more time. Put it to work in the markets. Follow this advice that comes from financial advisors around the country and take a look at real estate. Check out my video on how to invest on residential real estate. Once you start, you will never stop. I promise that. Thanks very much for watching. If you like this video, hit the like button and subscribe to this channel and hit that bell so you don't miss any one of my videos when they post. Make sure to follow me on Instagram, read my blog, and buy my new book for the cost of a latte. Thanks a lot, and I'll see you next time.